afternoon, good evening, traders from across the globe, and welcome to the 813th edition of Short-Term Trading Live with Oscar. Hello, ladies and gentlemen. My name is Oscar Carboni. I have been trading in and out of the pits on Wall Street my entire adult life, and I've come out of those pits to teach you some tips, tricks, and techniques that help me figure out where markets are going next. These videos are based on technical analysis of futures charts, and the trade setups are always based on the analysis that we put together. Traders, before we go forward, as we know, futures trading is extremely risky. It can cause substantial financial loss if you do not have risk capital to lose, if you do not understand the risks behind trading, and if you do not recognize that a stop is your best friend. You certainly shouldn't be trading markets, especially futures. But for you traders out there that do have money to risk and understand the risks behind it, rock and roll, cowboys, let's go. We got a video for you. This video is being filmed on Thursday night for Trading Friday. That would be Friday the 13th, and it's video 813. Woo! Traders, look, I am the least superstitious person on this planet. Friday the 13th is meaningless. We have a green Omni on the board. We love these green Omnis. We've had a green Omni on the board every day since we've come back from the holiday break. And once again, another one, you gotta love it. Traders, what's on the board? Weekly indices charts are breaking out. The weeklies are breaking out, and I can't wait to show it to you. Daily charts on U.S. indices are breaking out, and you'll see that. And in the last video 2 nights ago I did for you, I told you 2 things were about to happen. Technical analysis tells us the stock market's going higher this week, and the dollar needs to take a breather. The U.S. dollar needs to take a breather is basically what I said, and I put charts before you just 2 nights ago. Have you noticed what's happened? The dollar went down, the stock market's going up. It's exactly what the analysis told us. Go technical analysis. So, we're going to do a chart segment. It will cover the weekly indices charts and then breaking out, the daily indices charts and how they look on the breakout, and why the dollar looks like it still needs a bit more of a breather before heading north once again. Traders, if you like the analysis put forth before you in this video, please come and join me at my site. It's livewithoscar.com. Come grab a free membership. No charge, no cost. Can do nothing for you but help you, because one of 2 things will happen there. You'll show up at my chat room, you'll see the way I handle my Omni accent, my trading school, and you'll say one of 2 things. I don't like this guy, or I do. Right? It's one or the other. I think you'll like what we got going on there, traders. I've got 30 years experience in this business, doing technical analysis on weeklies and dailies and the dollar in every market you can think of in the futures industry. And I've gotten really, really good at calling the markets based on those charts. And I teach that at my site. So come on down to livewithoscar.com and take a look at this, traders. Okay, traders, the first chart I'm going to show you this evening is the NASDAQ weekly bar chart. This very same chart I've been putting before your eyes for the past 2 weeks in my videos. Right from this area where it started to break out, I put that arrow there and showed you the little line. Look how it's grown last week. And here we are this week, traders. We are right here, right now, on Thursday evening, breaking out on a weekly of a very nice little apex. The market is moving higher, and it looks fantastic. That's the NASDAQ. Take a look at a view of the industrial type stocks, or the ES, the E-mini S&P, brick and mortar. Take a look at this, traders. A really, really nice breakout, just like the NASDAQ. But the beautiful thing here is during our pullback right before November, December, or during November, December, it held the 200 bar moving average on the weekly very smartly. Since then, it's moved up, put in this little inverted head and shoulders. And inverted head and shoulders, by the way, is a bullish signal. puts in an inverted head and shoulders, breaks out above the apex, and look at it right now up here, traders. That looks fantastic. Now, I'm going to show you the very same market, the emini S&P weekly bar chart, but I'm going to add more data in. I want to show you this a bit longer term. Take a look at this chart, traders. This goes back all the way to 2009, the crash lows right here. We have been in a wonderful parallel channel. All the highs have hit, the major lows have hit, and it has held the 200 bar moving average. And it hasn't just held it. Look at how smoothly this market has reacted around the 200 bar moving average. When you break it, major breakdown. When you rallied back to it, failed, you broke down. When you got above it, major rally, comes back to it, holds the line, and starts to take off, traders. That is a very strong looking weekly chart. Now I think this thing is set to go all the way up here this year. Traders, it is looking very, very good. But let's continue to look at some charts here. Traders, this is the emini S&P, but it is a daily bar chart. Now, we've seen the weeklies. Let's look at the daily. It is very clear that an inverted head and shoulders, if created at the proper price and time, is a bullish scenario or signal for a market, right? Here is a chart. Many of you may not believe this if you're just tuning in now, but for any of my loyal Omniacs that come to my live site and my live classes that I hold at livewithoscar.com, you will recognize this chart. Before my Omniacs, right before the Christmas vacation, I drew this chart for them and I showed them that there's an inverted head and shoulders right here, and that we've gotten above the 200 bar moving average now that we've created it. And I went and I put this parallel channel in its place, and traders, I kid you not, none of these bars existed when I did that. This was not there. It was right after Christmas, or right before Christmas. And I said to my traders, look, it's an inverted head and shoulders with a V-looking bottom that is bullish. I drew the parallel channel in, and I told my Omniacs, now we're going to fill this channel in and go all the way up. Traders, look at what has happened since I drew this channel in when it was blank right here. The market has filled in, is touching the channel and working its way up, and I think it's going all the way up here. Traders, you would expect a breakout that looks like this after you have an inverted head and shoulders. So I showed it to my Omniacs and put the breakout there, and we are filling in that breakout area right now. That is the best technical analysis you will ever see. Not that I'm doing the best technical analysis that can be done. Any of you are capable of doing this. Just that the analysis itself works out so well. So make sure you look for these patterns yourselves. So here it is. The chart I put before your eyes does exactly what the analysis said it would do. And that chart looks set for much higher levels as we plod through the first quarter of this year. Traders, the last chart in the segment will be this one, the dollar index. The dollar index, same chart I put before you 2 nights ago where I told you, being that we do this, bottom, top, top, bottom, bottom, top, top, bottom, bottom, just about the top. Next thing is we come down here, and traders, look what's happened since then. We're starting to make the move now. The dollar needs a little more breathing room. This is what should happen. It's why I showed this video to you on Tuesday night for Trading Wednesday, and why this very same chart was just put before you again. Dollar coming off a little. I don't know if you should worry about the dollar much. It should be buoyant for the U.S. stock market. So, traders, you've seen the charts. There's my technical reason why we have the green Omni for Friday, and we expect the markets to just continue higher. Buy the dips in U.S. indices. Traders, always remember to keep your emotions out of trading. There's 2 things you can do to help yourselves with that. One is come to livewithoscar.com and come into my trading room so I can help you stay calm. And the second one is to say this to yourselves every morning, every afternoon, every evening, because you know what that is. Stops are in. Emotions are out. Yeah. Video 800. 113. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.